Good morning everyone and welcome back to Morning Markets from True Potential. Today I'll discuss how equity, bond and currency markets performed yesterday, but focusing on some of the important economic data which has been released over the last 24 hours. Yesterday, equity markets in many of the main indices were positive. Here in the UK, the FTSE 100 was up 1.3%. In Europe, they were also up 0.4%. And over in the States, we also saw positive readings with the S&P 500 up 0.5% and the Nasdaq up 0.1%. Overnight, Japan was a little bit weaker, down 0.3%. Equity markets were really encouraged by the robustness of some of the economic data, which continues to highlight the strength of the recovery we're seeing across developed markets. Yesterday we had the US ISM manufacturing index readings, an important leading indicator which surveys manufacturers on a monthly basis to get a sense of current and future business activities. The index dipped marginally to 60.1 from 61.2% in the previous month, and whilst this is a dip in the index level, this is still an incredibly strong report, with anything above 50 highlighting that manufacturers are actually expanding. We look to dissect the report looking at its different components. And as you can see in the chart, the production line, the one in red, rose, which is a surprise given the well-publicised supply constraints. The report indicates the sector is struggling really to keep pace with demand, with new orders rising considerably, which you see in the green line. And whilst they're surging, you continue to see a backlog of orders continuing to build. This means delivery times are lengthening, with customers increasingly desperate for stock. I'm sure many of you can relate to this as you go out to buy your new products for your home or looking to buy new vehicles. It's very difficult to get stock right now. Interesting that despite all the demand for goods and new orders, the employment reading, which is in the dark blue line, actually fell into contraction territory. It suggests that manufacturers are really struggling to find the right workers with the right skill set, and therefore are having to contemplate higher wages and incentives to fill jobs. Also interesting is the prices paid component, which is the purple line, and this is the costs that the manufacturers are having to pay out. And you can see the reading is nearly off the chart this month. It's at its highest level in 40 years. So it'll be interesting to see how this evolves and how it starts to hit company earnings in the future. Over in Europe, we saw some similar good manufacturing readings with Spain, Italy, France, Germany, but also the UK, proving that they're now expanding at a similar rate as the US, and in nearly all cases at a faster rate than last month, which has helped push equity markets higher in general yesterday. In bond markets, no real movements. You saw the US 10-year Treasury yield push up ever so slightly, up 2 basis points to 1.47%, really a reflection of the positive economic data that we've had out. In the UK, the 10-year gilt yield didn't really move too much, remains at 0.73%. In currency markets, we saw a little bit of weakness in the pound against the dollar, currently trading at 1.38, and was fairly stable against the euro. Pound now trading against the euro at 1.16. Today, investors will be keeping their eye out for the US employment report after already getting a glimpse this week with some positive employment readings. Tune in next week to find out more. Have a great weekend and we'll see you next time.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.